Well, hello there, everyone. In today's episode, we teach you how to retire a billionaire. Okay lah. I have to be realistic a bit because when I said billionaire, our guests already like stress. Okay. Now, I have to say this is not financial advice, but I mean, I watched this guy on YouTube. But before we get there, it's good to be back on the show. Ryan and Shufei, welcome back.
Yeah, let's go.
Up?
I don't know what you guys have been up to, although I see Ryan every day.
You know what I've been up to?
Yeah, you're in puppy love land. It's like out of nowhere, Shufei goes to the gym almost 4 times a week.
She's been working out so much.
Yeah, and I'm like,
Insane, right?
Yeah.
Thank you.
For the 8 years I've known her, she's never gone to the gym. You see what love can do? Love can inspire and motivate people. That's right. But ladies and gentlemen, today we have on the show, I watched this guy online one day. I tell you how I found this guy. I was going online trying to find the best return rates on all these banking apps that were spurting out like
FD rates.
not FD rates, like all these digital banks when they start already, right? Faster download my app, I give you good returns. And then I stumbled across this video and I started watching his videos and I realized that the way he does it was very straightforward, layman, and educational. Ladies and gentlemen, we have on the show Ziet, otherwise known as Ziet Invests. Yay!
Hi everyone, I'm Ziet. Apparently Jeanne watched my video, so I'm again adding this one into my bragging lines.
Yes. Thank you. I watch your videos because I want to retire a millionaire.
We try.
So
You said billionaire just now.
I'm sorry lah. Okay,
Removing the
stress
sentence
level was
again.
like,
it's okay. You can what? Just change your money into Indonesian rupiah.
Yeah, all of us are millionaires instantly.
Yeah, but okay, tell us a bit about your background because I watch you. I know you do. So just for context, Ziet does videos about financial educational videos, and I watch it because I feel like I'm very financially illiterate. Like we all grow up, right? We all go to school. We learn pendidikan moral.
That's true. Civic.
Yeah, we learn maths. Yeah, we learn everything. But nobody kind of teaches us the importance of investing. And then
I don't even think it's just investing. It's just managing your finance.
Yeah, actually.
Yeah.
They teach economics. They teach finance.
Yep.
But that's like helping brands or helping other people or client do finance stuff, but not your own
Your personal
stuff.
expenses.
Yeah, but Ziet, how did you get into making videos about financial education?
No, I think you hit the spot right because all these are not taught in school. It was not until like degree or diploma where you start to have like finance degree, then you learn a lot more about money and stuff. But then for like the rest of the masses, 99% of people like myself, we don't have those opportunities. So one of the main reasons I got into financial education videos, content is precisely because of this. There was so much missed opportunity, wasted talents that could have shined so much more for the country, for the society, right? But precisely because no financial education, and then that just leads to so many missed opportunities. So that's the core of what we do today. And the same mission starts 5 years ago. And today we are still heading the same mission. Although direction changes a little bit in terms of content, but ultimately it's still for financial education.
I heard financial YouTubers make a lot of money. Yeah, because the AdSense rate is a lot higher than
Wow, you want to get into that right now?
No. I see he's laughing. You see people with money laugh differently. Kidding. Yes, go ahead.
I want to ask, like, in your experience, like what you know today, how much of it actually came from? I'm assuming, I don't know lah, but I'm assuming you studied finance or something related in college.
Did you?
Maybe not.
I'm an engineer.
There you go. So this
Alright.
was my next question. Like, how much of it? How do you acquire this knowledge yourself? I mean, now your goal is to educate people on this knowledge, but you yourself, your journey to get to this point? How was that?
So just to be transparent, right? I had zero financial education until I started working. Absolutely nothing. No one taught me about stocks, assets, savings, interest rate, inflation, nothing. So I didn't understand a lot.
Wait, but your parents taught you how to put your money in FD, right?
Not even FD.
Okay.
I heard a lot of Toto, 3D, and Magnum.
Oh yeah. Every
That's
time
very typical.
Chinese New Year they buy. After Cheng Bing, they burn the paper already. Then got number come out, they buy.
They dream, they buy.
Yeah, they dream, they buy. They see a snake cross the road, they buy.
See accident, then they buy.
They see accident, they buy. What else? They see Siok say what monitor lizard, they buy.
Yeah.
I seriously, my mom's family all been doing this for God knows how long. Oh, actually got strike before. Yeah, 4,000 ringgit.
Hey, not bad with that
Oh,
one.
not bad. Yeah, then after that they buy us dinner, and then that's about it lah. Okay, yes, go on.
No, strike definitely got strike, but the probability of it is like almost zero, right?
Yeah,
it's like 1
yeah.
in a million times, and yeah, sometimes you strike 10k, 20k, so what you spend like 100, 200k, right?
Yeah.
So ultimately, it's negative returns, double-digit negative returns. So yeah, it's very unfortunate. My parents are hard workers, right? Straight up honest worker. Mom is a white collar, 9 a.m. to 9 p.m.
Yep.
My dad is a primary school teacher.
Oh.
Honest workers. But they taught me they work very hard. It's just that all they know is savings, a bit of FDs, and what's left. The hope to get rich is Toto Magnum, this kind of stuff lah.
Yeah.
So a lot of missed opportunity for I guess Klang boy myself.
You're from Klang.
I'm from Klang.
Klang.
Shout out to Trippy.
Hey, I'm also from Klang.
Oh really?
Yeah, I used to grow up in Telok Gadong.
Ah.
Then after that, I moved out to Subang at 4 years old. Yeah, then I became a Subang boy.
Che, 4 years old, you 4 years in Klang only. You don't even remember lah that time. You're infant, bro.
She's not wrong.
You're infant, bro.
Hey, I know. Okay, I know. Got train station.
Oh yeah.
Oh yeah. Hey,
Got road also, Klang.
Got.
Got traffic light also.
I don't think I was old enough to even understand the Klang had the best bak kut teh. But the kopitiam culture started from Klang, okay? The kopitiamness came
This
from
one is
Klang.
a different conversation for a different day.
Yeah, okay.
Kopitiam fight next round.
Yeah, but I find it very relatable because growing up, right, my mom, because my mom's a government school teacher, she taught me a lot of things. One, work hard so that you earn money. It's always work hard, right?
Still true.
Yeah, still true. And then, two, work hard, get money, girls will line up.
Wow, that's...
Still true.
No, didn't. Yeah, to an extent. Yeah, but it didn't work for me lah. At all because I didn't get both. And it's always been a very survival culture growing up. We work hard to survive, and it's always save. And that's why, right? I think in my first few years in the workforce, right, I'm not sure whether you're like this too, but I work, I get my salary, but I always make sure that my bank account balance does not go down under a certain number. So last time, right, the minute it goes under 500 means I don't spend anything at all. But the minute I have 500 in it, right, anything above 500, I spend.
No, same.
Really? Yeah. And
100%.
so that means like the 500, right, is like constantly there.
The lifeline.
Yeah, it's the lifeline.
Yeah.
Until only when I was like 29, right, suddenly somebody come and tell me, hey, put it in the FD lah, because I've kind of just made a bit of money. And then I went to this bank, UOB bank, and I saw their FD rate, it was 4.5. Then I was like, wow, if I put this amount of money into my FD, right, the interest, they pay out interest every month, by the way, the interest can help subsidize my car loan leh. Then straight away in my mind, I was like, wow, it's like free money. And then that's where I started reading up. And I realized that, I wish I did this a lot earlier.
The interest margin, understanding all this stuff.
Yeah. But the thing is, fixed deposits weren't the best thing to get into, right?
Back then it was, right? Back then you don't have all the digital brokers. To get access to unit trust, you get, people say
Agent.
the fees is like 4-5%. So you're left with breadcrumbs, right? Your return, right? Let's say your manager even managed to get like 8-9%. Your fees are 4-5%.
Yeah.
End up you are no better than FD. So back then, FD was somewhat like a guaranteed win thing alongside EPF, which money you can withdraw, right?
Yep.
Yeah.
But nowadays, there are so much more opportunities and choices, which we can dive into later. I think it's post 2017-ish, things just open up for the financial landscape. And I think so much opportunities present right now. Back then, FD was still pretty solid. So you're not wrong, actually. The fact that you are even in FD, right? It's good enough already.
Like,
Yeah.
would you say like FD is a good introduction to people about investing their money? Because in my head, right, why FD? Like, if you ask me, also like I'm a very risk averse.
Low risk person.
I don't like risk. I don't like to gamble. So like FD in my head is like, okay, it's damn safe. It's backed by Bank Negara. Even if the bank up, if you buy the correct FD at the correct amount, Bank Negara, there's a guarantee that you will not lose your money.
The PIDM assurance of up to 250,000. Yes.
Yes, correct. And now the job already, I think it's 50,000.
No. Still
Is it
250.
250.
Still 250.
Yeah. So basically that money is covered by bank. Covered by Bank Negara.
Yep.
So like, would you say it's still a good place to start your investing journey and see if like it's something that you're into? Or?
It is. I would say it is still a good place to start your savings journey. Because the way I look at it, right, there's two parts in the finance world, right? One, the saving part, one, the investing part. Anything that is classified as investment asset, right, there's no capital guarantee.
Yeah.
So like what Ryan mentioned just now, it's actually in the world of saving. So your savings accounts, your digital bank accounts, your fixed deposits, those are PIDM guaranteed up to 250K. Beyond that, you're entering the Wild West, where you have starting with money market funds like what, 4-5% per annum.
Yep.
Then you slowly move up things like ETFs,
Yep.
stocks, funds, then obviously property, then crypto, etc., etc. So to answer your question, if you're risk averse, right, the fact that you are already starting with a better savings assets in the sense of fixed deposits, I think that's a good start. But obviously don't stuck there. Read more about what is the next asset. Money market fund, no? It's still very, very super low risk to the point of almost no risk, right?
What is a money market fund?
Money market fund is basically, think of it as like a government bond or like a bond like that, where it's super safe, short term, 6 to 12 months bond that, let's say, okay, let's put it that way. Let's say today businesses want to, or governments want to build a highway, 250 million. They can't just walk into CIMB, say, I want to loan 250 million.
Yep.
It's very hard. So they need to issue bonds, 250 mil, 50 mil maybe subscribed by this particular company, 20 mil here and there. So they segregate out.
Yep.
That's bonds in general.
Yeah.
So in that sense, money market fund in Malaysia usually are Islamic bonds, etc. So very low risk, very high, they call it high rating, right? Very safe, good companies, good loaners. They will always pay back, companies like building highways, building infrastructure for governments. Technically, it's in a way also guaranteed by governments to pay back lah. Unless the government, bankrupt and cannot pay back. So it's very low risk, and the rates are actually pretty decent, actually like 4%, 4.5, which is decent enough for you to beat inflation by a little bit.
Yeah.
So at that sense, that gives you exposure. You start to beat inflation. Now you start to feel like a winner.
So,
then you learn the next
I
asset.
think like from what I from just this short explanation, the goal here is not so much how much money you can make, but the ultimate goal, the primary goal is to beat inflation. Because if you have 100,000 ringgit, the value of 100,000 ringgit 10 years down the line is not going to be the same. You can't buy the same things. So what you're trying to do is you're trying to take this 100,000 ringgit and without having to spend much or touch much, it will retain the same value in the future. Is that correct?
Correct. So what you just described perfectly is time value of money. Your 100 ringgit today is worth less than 100 ringgit 10 years ago.
Yeah.
Due to inflation,
Are you
right? Obviously.
surprised?
Your purchasing power
We
includes.
can see already like 10 years ago, our Kai Fan is how much? Now our Kai Fan
Yeah,
like
you look at your iPhone when it first came out, 3,000 ringgit, now
Now
almost
7,
8,000.
8K.
Eh. What the
Correct.
hell?
Exactly.
Yeah.
Oh my god, are you surprised that I actually understand this? I actually know about
No.
this.
I mean, I understand the simple
That's
concept.
your
I didn't know there was a term time. What time value?
Time value of money, TVM.
Time value of money.
Okay, this is where I need to say that Shufi is an honest student because she's very smart. Okay, yeah.
No, but like, okay, I think in contrast to you, right, I think I'm very blessed to have parents who are financially literate.
Oh, that's good.
Yeah, because my dad used to work in a bank, ma.
Ah.
Yeah, so like I think he knows like more than like we
For sure.
more than us
99%
lah.
of
So
people.
yeah, so growing up, I think me and my brother like I think very grateful lah, cause like my dad will put in money for us here and there. So now that we're grown up, they're like he'll give us and be like, yeah, I invested this much for you, now it grew already, so you'll just take the money.
Oh, so nice.
Yeah, so
Yeah, my mom did that for me, but she did the education fund
oh yeah. That's,
where they subscribe to something through an insurance agent. Then after when you pass 18 years old, you get a lump sum money. So yeah, I passed 18 years old. She took the lump sum money. She took it back.
But that one, a lot of insurance companies also they do that, like almost like a forced savings.
Investment.
Kinda,
Yeah.
Yeah.
But wait. Before we
Yeah.
go there, Ryan, do you understand what a bond is?
A bond is basically like. Yes, I do know, but I don't know if I'm describing it correctly. Okay. So
Because
let me try first.
yeah.
Let me try
Get
first.
technical.
So let's say like it's a guarantee of money in a way. Like like it's like an IOU in a way. Like I
True.
pinjam
Yes.
I want this money and I need to issue a bond to collect money, but the bond says I will pay you back. In a way, it's a
Okay, can I-
pinjaman berlesen.
Can I explain
on a
it?
big scale.
Can I explain it in a more
Yeah.
layman term? Because
Yeah.
like Ziet does this way. Imagine I am a business, okay? I want to buy camera, but I got no money.
That's how it sounds.
Okay.
Oh, I know. So you start like a Kickstarter thing.
No. Then I go to you. Hey, Shufei, can pinjam me 5,000 or not? Okay. I pay you back in 10 years. But on top of that, I give you interest per annum 4%.
You are the bank.
Is that correct? Is that correct?
In a way, I would say correct.
Okay.
Correct, yeah.
I like how everyone's
You
just
know how
trying to
we pinjam
impress
from
him.
bank and then we have to pay back with interest?
Correct.
So now we are the bank. We buy the bond and then we get back interest.
You issue the bond, people subscribe to you. Yeah.
Yeah.
It's the same thing.
Yeah, but what's the difference? Okay. Then, in my understanding, right, a bond, right, is like you loaning money to the big corporations.
And they'll pay you back.
Yeah,
With interest.
Yeah, they'll pay you
Yes.
back with interest. It's like you are loaning them directly instead of them going to the bank.
Wait, then when they go to the bank, they have to present these bonds also to the bank, is it?
I mean, obviously you can buy the bonds over the counter, but nowadays they don't do that.
Yeah,
really.
you can
Like,
do it
it's usually
online.
just
Yeah.
digital and stuff. But last time, long time ago, same with share trading, they do it over the counter. So, to answer your question, nowadays they don't present like that. Hey, this is a certificate for 250 million highway. They don't do that now anymore, lah.
Yeah, and bonds. Okay, so this is where I got a little bit confused initially about bonds. They say that each bond has a par price. That means it has a fair value of $100. It may go up, it may go down. Can you explain a little bit more about that?
So
I don't know.
we can go that rabbit hole.
Yeah. No, serious. Okay, let me explain why. Because I invested in the bond, right? And then they tell me, okay, this bond pays a coupon of 5%, and the yield is 8%. And in my mind, I was like, why you put 2% there? Just tell me what I'm getting. Then she's like, oh no, this is a 4%, a 5% coupon, but you get an 8% yield. So then I'm like, then straight away I replied, so I get 8%, so I get 8% per year. Like, no, you don't. And call date, you will get 8%. Then I'm like, yo, stop confusing me, man.
Give me one number.
Stop trying to pull a freaking unit trust agent. I know you're trying to bluff me. Is it? No. So she laid down, okay, as long as you have this bond, as long as you hold it, you get a coupon of 5% per annum. At the end of the bond, you will get back your capital. So let's say, for
Then what's
example,
the 8%?
So what's the 8%?
so
Okay,
so
okay,
if I bought, so the bond has a par price of $100. Okay,
Yes.
if I buy, let's say for example, if I buy the bond at $90 on call price, the person will pay me back at bond par price value $100 per.
Wow.
I'm trying to math.
Yeah, so you see, I'm freaking confusing the living
Yeah,
daylights
what
all of
call,
it.
what
So
par?
Ziet, please explain to us.
In layman.
Yeah, in layman.
I try to make this as interesting as possible.
Yes.
Okay, so you see, like in general, bonds are like what you described, right? A bit similar to loans, but kind of different. In that sense, loan is what you take a car loan, you pay every single month installment.
Yeah,
right?
yeah,
Very
yeah.
simple, right? Based on the interest rate, but it's floating, etc., right? But for bonds, they usually subscribe a longer tenor, 10 years, 20 years, 30 years, like that, to pay back one. Then like got the coupon rate 4, 5, 6%. The longer you go, usually the I would say the higher the interest rates,
Okay.
or the return will be. Why? Because as a bondholder, if you're loaning a highway company to build a highway for, and you get back the money in 30 years, you're taking a lot of risk.
Yeah.
What is riskier? Lending your, let's say 10,000 ringgit to, let's say to Shufei for 1 year versus 10 years. Which one will you be more comfortable?
Yeah, like 1 year, like
Less risk,
Less
right?
risk lah.
She
Yeah.
pay back in 1 year, right?
10 year, I don't know where she go already.
Correct. So you're taking more risk with a long-term bond.
Yeah.
So your rates are higher.
Do you think we'll not be friends in 10 years?
But, you know, life is very unexpected, you know. That
not
kind
wrong.
of, I don't know.
Yeah,
Touch wood,
Shufei.
touch wood, but-
Hey, I've been with you guys for 7 already, yeah?
Yeah, not 10.
Almost 10, yeah? So actually,
Okay.
by right, you'll get back your money.
Yeah, okay.
Yeah, so that's one thing that you need to understand about the bond tenor. Second thing is interest rates.
Yes.
Right. So
Yeah.
that thing is already set in stone, right? That particular interest rate is signed off on day one, 30 years, cannot run 6% like that.
Wow.
So it's set already. But what changes is the interest rate from time to time, where our monetary policy, Bank Negara in general, right?
Yeah.
Central banks,
Yeah.
they adjust the policy usually every 3, 6, or 9 months, like that one.
Yeah.
So that changes, and when that changes, that affects the price of your bond, because they up and down, they become less attractive already.
Yeah.
So the par price basically, right?
Yes.
If interest rate is higher today, let's say today is 3%. Actually, they're up to 3.25%.
Yep.
As of the recording of this video, is 3.25%. Let's say they're up to 4%, but your bond, long-term bond, is stuck at 3.5%. Who the hell want the long-term bond?
They rather put it into an FD.
FD 6
Yeah.
months 4%.
Yeah.
So the attractiveness of that particular long-term bond just drops below the drain, right? So basically, that is basically the dynamic. And then when you're talking about bonds, right, it's because it relates to smart money, big money, fund managers.
Yeah.
For us, 3.5 to 4% might not mean a lot.
Yep.
For
Yeah.
people with tens of millions of active cash like banks or central banks or big corporations, it's
Yeah.
at least 5% of their profit margin easily.
Yep.
It scales very,
It scales
very
a lot.
fast.
So,
yeah.
so
Yeah.
that's basically the ins and outs. It's very sensitive to interest rate in that
So
sense.
the bond interest rates will also
Fluctuate.
get adjusted according to
Their coupon rate will not adjust,
Yeah.
but their attractiveness will.
Oh.
So it's like, you see, the bonds are issued at every 100 denomination. It's
Yeah.
like $100 bills. So if you want to buy $100,000 worth of bonds, right, they have to pay you 100,000 divided by 100. That amount of bonds are
Called bond yield,
What I'm trying
yeah.
to get is like when you want, let's say you want to go and buy a bond also, so you need to weigh out how long is it and what's the interest rate.
Yeah.
Like if it's just 3% for 30 years, like wow, it's not gonna fight. Yeah, you're talking about TVM, it's not gonna be able to fight that. Your returns, but at the end of that 30 years, right? In the end, you might even lose out money because of inflation.
And you're basing that off of your perception towards inflation is about 3%. So you're gonna lose your TVM over 30 years.
Yeah.
But for countries that are practically deflating, 3% is interesting.
Yeah.
Yeah. So that therein you're actually benchmarking off the inflation also, the currency strength of the country also,
Yep.
the policy strength of the country also. So everything ties together lah.
Yeah.
And goes back to your TVM. You're correct.
So that's right. Buy bonds, Ryan.
Well, no wonder no one.
Yeah,
Invest
like,
in Malaysia.
so the latest
What happens
conversation,
to
the
this, no one
latest
can tell,
conversation right now, it's basically the central bank, the federal government. Is it federal bank? Is it Feds?
Central bank.
Central Bank of
Bank.
America, the Feds. So obviously Trump is trying to make them lower interest rates because America is.
Because they've been raising it over the last.
Yeah,
couple
because
of years to
inflation
fight
there, because
inflation,
inflation there was insane. It was
Yeah.
9% or
My friend was
something.
telling me like the egg, no, that was egg shortage, nothing to do with inflation, little bit, but yeah.
No, it is
It's like
about-
it went up insanely high.
Yeah. So apparently,
One egg, $1, Can you imagine? USD, at one point.
that's 4
What
ringgit.
happened to
man.
Yeah.
the chickens?
Crazy.
They got some chicken problem also because of avian flu.
Yeah.
But that did not help. Yeah.
Correct.
So he was saying one egg $1. He need to make his 12 pack of egg last 1 month. So he very yam gong. Yeah. It's quite
Yeah.
insane.
It's
So-
a commodity.
So apparently they're gonna basic. So right now the interest rates are at 4.25 to 4.5 in the US. So apparently they're gonna be cutting interest rates to 4%. So that's why bonds are sort of like apparently. So bonds are about to shoot up if they lower interest rates. Am I correct?
Bonds are about to shoot up in price.
In price, yes. In price, yes,
Because
yes.
it become less attractive already.
Yes.
So it becomes expensive.
Why do you laugh at me, Shufei? She's like,
No, because when you say you were financially illiterate, I didn't believe you. I was
He
like,
actually
no
knows
way.
a lot.
And then now they're asking you like, right? I'm like,
He knows a lot.
no. Yeah, but this is because of years and years of trying to understand. But before that, people just tell you like you want 4.5%. Yeah, okay, that's it. That's how they.
Correct.
Yeah, but most of the time I ask them like, oh, why can I get 20%? Or then you need to buy stocks. Or then I'm like, no, I don't want stocks because when growing up, everybody tells me, my family, all members don't get into stocks. I hear people invest in stocks, lose all their money.
but you're
DBB,
the one who asked me to invest in stocks.
Yeah, because I already know, man. you are.
It's actually very good advice, actually. Maybe not individual stocks, but start looking at equities. It's actually a very good advice.
Yeah, I mean, I do it sometimes.
One person told me this: if you don't know what stocks to buy, just wake up one day and wait. When you wake up, observe what you need first. First, you go to your phone. Then you go and brush your teeth. Then you need to turn on the lights because your curtain's still closed. You need light. So from that denomination, right, I buy anything with technology that revolves around phones, right?
FMCG.
FMCG, yeah, whatever. But that one, is too broad. And then energy, the Naga National. Mm-hmm. So it's because everybody needs it.
True.
So for a fact that even if their stocks were to be volatile, right, it won't be as crazy as like 50%, 20%. It'll be very constant, like 5%, 5 to 10% lah, if at a really worst case scenario lah. So I'm like, oh, interesting. Capitalizing. Yeah. So that's where I was advised to start. Yeah,
Okay.
but I didn't buy those stocks.
I buy based on feeling one.
What? Wow,
Wait, you want to know a funny story?
Okay.
I bought Netflix, like, I think somewhere last year or something.
Yeah.
Then, like, I don't know, I just bought it. I was like, oh, Netflix. I love watching Netflix. I'll just buy like one. Then I just buy it all. Then what the hell? Like, suddenly, like, I think last week or something, it shot up double.
Yeah.
Yeah, I just sold it.
Shufei's just trying to be really humble. She's a billionaire.
I'm not. I'm serious. I just look at it, I'm like,
Yeah, 'cause she doubled up. She doubled up her money. Yeah.
No, that was the only time I was lucky though. The others like,
Oh, really?
not very lucky.
But I think that's why that's like the danger of stocks there, you know, like
Yeah.
people just cow feeling, cow luck, but when they don't understand the data, then they don't know what they're actually doing with their money. It becomes like almost like gambling in a way. You
I
know?
think Shufi didn't.
Pok this one lah. Let's hope I go double lah.
feeling
Without
like
no lah,
any,
cannot
like-
lah.
Yeah, exactly.
But what
she
she doesn't
research, you know.
what she didn't realize is, I like Netflix. She actually uses it.
Yeah.
A lot of people use it.
I mean, I think like stocks like Netflix and Apple and all, they are like slightly more safe because you already know the brand is very established.
Yeah,
you know
yeah,
their
yeah.
sales
That's
are not
true.
going.
Their model is
Stable, you know,
Stable.
compared
That's
to
true.
you buy some
The
random aerospace
Palantir,
engineering
Correct.
stock like that.
I'm not
that
gonna
you don't
lie.
know what's gonna happen.
I'm not gonna lie. After putting my money into fixed deposit, right, the next thing I went into was actually crypto.
oh
Yeah.
It's like two different worlds.
Yeah. Yeah, because
It's like meme coin.
yeah, okay, that time got no meme coin lah. Because like, you know, your whole group of friends suddenly put you in one group. Suddenly out of nowhere, we know when WhatsApp groups started appearing out of nowhere, suddenly you just put into one group, right? Hey, guys. Wait, buy Bitcoin, wait. I put in 10 ringgit, yeah. Today 20 ringgit leh. You know, that kind of thing.
Yeah.
Then we all like, oh, what the hell is this? What the hell is this? And then everybody just blindly drops their money in there. So yeah, I started investing into crypto lah. People back then, they buy XRP. Out of nowhere, XRP was like 5 cents. Then like suddenly we woke up the next day, I went up to $1. And some guy put in 100 ringgit, suddenly like double, he suddenly got like 10,000. It's insane. Then suddenly people everybody got greedy. And they be like, this is the get rich fast.
Yeah.
And it's investment because, you know, there were exchanges that look like the stock market, you know, the candle bars, the red, green. So when we look at all that, right, I'd be like, wow, cool. Then I put some money into it lah. Then it went up. And then, you know, here's the problem with, I won't say with human nature lah, but here's the problem with some people, okay, including myself. When you see your money grow bigger, right, you get more greedy.
Of course,
Yeah.
100%.
When it goes higher, like, oh crap, it looks like it's going to continuously go up. Maybe I should put in more because if my capital higher, my returns higher, then I put in, crash during Chinese New Year. And then it's so funny, you know, every time it crashes, right, there is a supporting reason to why it's crashing. Oh, people crashing out, during Chinese New Year, give ang pao. Wow, buy the dip. Okay, then you put in more money, then it crash some more.
That's what everyone says.
Diamond hands.
Yeah.
This is like when you go Genting and you're down like 10 grand, it's like, okay lah, if I bet 10,000 here, I'll make back my capital.
Yeah. Then it crash already, right? Okay, now this is the time you buy diamond hands because you know why? You buy the dip. Then when it go up, you make double. Then after, okay, I'll put it some more. Then it crash some more. Then I gave up.
Yeah, they call it what? The bear market or something, right?
Yeah, the bear market, yeah.
The bear
I
market.
know my terms.
but like, I feel like those things, right, you need a lot of money. Eh? You need to be able to roll.
No.
Yeah, because if you want to
Depends
keep buying a dip and then you want to try and influence the market in that sense, you need to be able to ride out the whole dip, you know.
Yeah, then
That's the problem.
Then the whole group started scolding this one fellow who created the group who asked us to invest. Hey, Bobby, bloody hell, you asked us to come invest like that, now like that. What should we do right now? Hey, do your own research. This is not financial advice.
Hashtag no
DIY.
financial.
And then after that, like, only invest what you're willing to lose. I'm like, nah, this guy. And all this bullshit all come out. Then I'm like, oh, okay. Then from then, I decided to like, okay, let's invest into, because I saw this meme, right? There's this meme lah, okay?
Meme coin.
No. There's this meme on 9gag, whatever,
okay.
about this guy. Is an investor. Oh my god. This is traditional investor. Oh my god. My portfolio just crashed 5%. Oh my god. I'm losing money. Then after that, you have a crypto guy over there. First time, you know, because they crashed 90%, ma. So then I'm like, oh, okay, cool. I think I could stomach 5%. Then I went into traditional investing.
Stocks,
I didn't get into stocks because again, I grew up with the thinking of like, oh, you invest in stocks, you lose all your money.
What other investments are there besides stocks? Okay, Shufi.
Don't say Pokemon cards.
No. Okay, I know everyone keeps thinking that I invest a lot in Pokemon cards, but I'm not like super crazy.
Yep.
Like people behind the camera are more.
Yeah, I know.
okay.
One of my producers is way high. I saw her portfolio. I'm like, wow.
Okay, we'll get into that.
She could come to me and say, "Shut up, boss. Watch your mouth. Don't tell me what to do."
I pull out my Charizard.
Wait, but Wait, do you guys want to talk about Pokemon? Okay, we've talked about it later. Lah.
Okay.
Other forms of investment, right?
Yep.
ASMB. ASMB.
Oh.
You know about that?
No, I have
No,
no
I don't
idea
know.
what is that.
I'm surprised you bring that up.
Oh, yeah. See, I know myself.
What is ASMB?
Amanah Saham.
Oh, didn't they just recently open that to like non-Bumi
Yeah,
Putra?
yeah.
Oh.
They opened twice already. 2 weeks ago was like the second
time,
one.
okay.
Yeah, the first time was like, I think a year.
Wait, so
or
how
2
does
years
that
ago.
work?
Everybody just looks and see it because we don't want to butcher the explanation.
Okay, wait. Okay,
no.
so ASMB has different categories, right?
Correct.
So there's one for Bumi, then for non-Bumi one.
Yep.
From what I know lah. So we can only put in for the non-Bumi one.
Yep.
Yeah.
Yeah, then it's classified into 3 also. Right?
Correct.
Oh my god, I feel like we're taking a test.
That's it.
And then
Yeah, okay. So
I
you
still
can-
don't understand what you're talking about.
Yeah,
Okay.
but the one that I put in is the fixed price one. So it's like 1 ringgit, I think.
Ah.
Yeah, so you put in money and then it gives you like how much was it? Is it 4?
4 to 5.
4 to 5%.
Percent.
Oh, wow.
Yeah, a year.
So you can only put in 1 ringgit.
No.
Fixed price.
price.
Fixed price is
The
so it doesn't
stock
fluctuate.
that stock
It's 1 ringgit.
All, they what
You'll
they'll do
always be 1
they will
ringgit.
do or they will in any power that they have always maintain it at 1 ringgit.
Oh.
So it'll never go up 10%, 20%, 2x, 3x, 3x, but they always maintain it at that
One.
price. But the dividend yield, is it? Will be
They call it dividends.
dividends will be about 4-5%, that kind of thing.
Yeah.
Yeah.
It's in a way, long story short, government guaranteed lah.
Yeah.
Yeah.
Right.
It's
But
I like the
catch-
word guaranteed.
The
Yeah.
catch is, non-boomies, it's very limited allocation.
Yeah.
Even if you get like what, few thousand ringgit, what difference does it make?
So there's a quota. There's a quota
Yeah,
to it.
so
lah.
if like don't know how many people buy already, right? Then you cannot buy already. So every time when it
Yeah,
opens,
yeah.
right, you have to go and
they fight for it.
Yeah, you have to go and
how you
So-
go to the bank or like online like
Not online can already.
Oh, I
Yeah.
thought you
the
go
app.
to the bank.
Yeah,
like-
yeah.
So for the benefit of our listeners who probably are left out in the dark, what is ASNP and what does it comprise of?
Wow, technical again.
Yes, yeah. No. We have to be. Yeah, because
Not my expertise. But
yeah.
So by nature, it is a unit trust.
Okay, what is a unit trust?
Wow. Unit trust is basically a fund that is managed by, fund managers.
Yes.
Right. And then they sell it at the fixed price to you.
Okay.
So basically, if they manage 600 million ringgit, right, they sell it at a fixed price to you. Their NAV divided by a number of shares, etc., etc. They sell it at a fixed price. So if you invest 1 unit of unit trust, it's cost at 1 ringgit.
Yep.
But if it drops, then you lose your money, lah, right?
Okay.
If it increases, then you gain dividends, lah, right? But in this case, this is a fixed price. 1 ringgit for ASMB, right? Then on top of that, government pays dividends based on their dividend pay, like Petronas, Maybank, etc. They get the money, they pass it down to ASMB, then they give dividend out. That's how they can sort of guarantee the kind of return. So long story short, it's a fund that invests in anything. It could be investing in Islamic markets, investing in bonds, investing in Asia Pacific market. So it's like a trust fund basically.
Yeah, so basically it's a pool of money that
It's a pool
people...
of money.
When
yeah.
you say 5 to 6%, that is not guaranteed, right?
4
That
to
is
5.
their target.
It's a APF.
It's a
capital
target.
guaranteed, but it's not guaranteed
Guaranteed,
return
yeah.
like 6-7 every single year.
Yeah.
But it's
Yeah.
still
It
in
depends
a
on
way,
how their fund is doing, lah.
even though it's not paper or black and white guaranteed, right? The investors or the buyers have expectations.
Yeah.
Okay.
Especially, because it's predominantly boomies, right? Your voter base, right? They
Yeah.
have certain expectation on the returns. If you lack off from there because of financial economic situation or because of your companies your funds are not pulling off well, then you have to pump more money to make sure that the returns are at least still there. Right. So it's kind of sensitive in that sense.
Basically,
Government
it's...
will actually pump money into this unit trust fund, lah. Let's say if their returns drop below like 4%, just say it drops to 3.5 and they kind of need it to go back to 4, then government will pump more money into
it's not
this.
black and white, but something
In a
like
way
that.
lah.
Yes.
Yeah.
It's like me giving you $10,000. Okay, Ryan, you can do whatever. That means you're going to do whatever with this 10,000. You
I just need
either
to make you that 4%.
you go gamble or you buy crypto or you buy a camera and then make money off that camera while shooting other things. And then maybe you make $50,000, but you only pay me back 4% of my 10,000. Is that correct? Layman term of explaining it? No.
I mean, roughly
Bad.
correct. Yeah.
Okay.
I would say like that.
That's a really bad explanation, but yeah, something like that.
But it has
No lah, but
dropped to
if-
3% lah.
No, lah, but I think the more interesting part is that because it's fixed price at 1 ringgit,
Yeah.
that's what makes it safe. You know, like you say, your share price won't go below that, because you know you can buy other stocks that you can buy at 10 ringgit, and then maybe it goes down to 5 ringgit. Then technically you lost half the value of.
That's
what
the
you bought.
typical unit trust out there, lah.
Yeah.
The typical unit trust.
But every time I hear unit trust, right, it's like a very taboo thing, because you know unit trust agents, that kind of thing. I've seen this lately on Threads. Normally X, you know, Twitter, X, now Threads. There some people have been calling out all these agents, like what you mentioned earlier on. Like after they deduct their 5% commission, you're literally earning like next to nothing. Like my wife put something in a mutual fund. Unit trust and mutual fund, is it different thing?
Roughly similar. For broad layman, it's roughly similar.
Yeah.
By definition, different, but roughly similar in terms of workings.
She put like somewhere close to like 40,000 ringgit. After 10 years, she got back like 42,000 ringgit. And I'm like, you put in FD. Yeah, you put in FD. Better 40,000, you put in FD 3%, also 2%, so you get more than 2,000 ringgit. Leh.
Yeah.
So she was like, what the heck is this? So she's also very financially literate. She like to work, save money, watch the money grow, don't spend.
Wait, but like her 40,000, is it like one lump sum or accumulative, like she put in every month?
No, one lump sum.
Yeah. So like FD like that, you have to put the money in there at one shot.
Okay.
Yeah, one lump sum. So
Actually, to be fair, right, when people put 40,000 like your wife like that, not her in general, right, masses, right, they're happy to see 45k back.
Really?
They're really happy to see 45k.
Really?
In a way, capital, my savings is there, then I get extra free money. Obviously, they don't go and analyze, this is 1.2%. They don't do that.
As long as
Right.
you see there's a gain.
There's a gain.
That goes
correct.
into the earlier conversation about is it savings or is it investment? So this one will fall slightly more into savings if you go in this mindset.
Yeah, but the agents
Whereas
are...
my
This is
money
an
is
investment product sold as like a savings product to people.
But the agents are driving their Mercedes, and then it's like, yeah, you know, then you get paid like 2,000.
Brother, do you want financial freedom?
Yeah.
26岁驾兰博基
So
尼。
what?
如果玩不是梦。
So Viet, what was your investment journey? How did you start? What was that turning point for you?
So for me, it was my job. I was doing financial analysis work, market analysis, reading companies. Because back then, I work in YTL Power. So power plants, independent power producer, they call it.
You got any insider information?
They no longer do fossil fuel power plant anymore. So, why you want to buy the stock?
Yeah, maybe. Good time buy. Good time.
Cannot say on camera. Lah.
Okay. Okay. Give me signs. Oh, sorry. We shut the camera off.
Let it.
After the commercial break. Okay, so what was your investment journey like? Tell us about that.
I started, so like I said just now, it's a lot of market research work, but I never had any financial background. I'm an engineer.
Okay.
Mechanical engineer, right? I was given the leeway to choose between technical side, building power plants, technical engineer stuff, or go join the sexy business commercial end. Obviously, the money part is more interesting.
Yep.
So went into the commercial part, did analysis work, financial modeling. Then a lot of stuff can't really understand enough or fast enough, right? Then my boss just say, go buy stock lah, throw yourself to the deep end, just learn. Then I say, buy what stock? Any lah, bank lah, REITs lah, go buy lah. Just buy, start an account, just buy. So that's how it began. The whole thing began from there. And then a lot of self-learning, I would say reading online tutorials, then asking my boss. He is more of, I would say he earns a lot in that sense.
So he's a whale.
But he invests in very low risk stuff like banks, REITs, very solid 5-6% dividends,
Yep.
very frugal living, and then that was quite inspirational. So I thought I can do the same thing.
Okay.
Right. So went all in, banks slowly,
All
5K, 10K,
Uh-huh.
pretty solid amount of money for like a first time working 3,000 salary kind of 9 to 6 worker.
Your
already.
first time you put in 5 to 10k.
Yes.
Wow. Okay.
Slowly like 3K, then add 1K like that, slowly,
Yeah.
slowly. This was 2019,
Okay.
right? So banks in general are staple in Malaysia.
Yep.
Tenaga, like you said, it's utilities, people use energy,
Yep.
Staple. So slowly up. Then you get very consistent dividends.
Yes.
You get like 4 to 6% per annum.
Yep.
And they split like quarterly. Every 3 months they pay you dividends. So
Yep.
for your 5K, they give like 120, 150, 200 ringgit. It's solid amount of extra income.
Yeah.
Like even though it's small, but back then, 2019 terms, it's a proof of concept that investing works.
Yeah.
Investing is
If I
it
put
works.
3K, I get 120. What if I put 30K.
Exactly.
What I put 3 million?
So it's easy passive income.
Yeah.
Just put your money, let it work for you. Exactly theorized by every single influencer out there.
yes.
Yeah. So 2019 went down. 2020 started. You know,
Oh, COVID.
what got struck hard by the pandemic? Real estates, businesses were closing down.
Yep.
No more businesses, no more malls. So all my REITs, touted as one of the safest low risk dividend investments, right? Just went down the hill.
REITs is Real Estate Investment Trust. Yeah,
Thank you.
just in case.
Oh, REIT.
Yes.
That's what it stands for. I've seen this term before.
Exactly. So you see,
I've seen
you see,
it,
I was like you, Ryan.
know
I see this
what's the
thing.
right-
I see this thing in the news. I was like,
I
REITs,
thought
REITs.
some Angmo punya thing, some Andrew Wright invent some shit and then
Yeah, I thought it was named. Okay, sorry. Go on.
No, but long story short, REITs are basically a fund that invests in properties.
Yep.
Like think about your Mid Valley, your Sunway Pyramid, etc., all the malls, a pavilion, you know, KLCC. Basically, they invest in those property and they manage it. So all those are solid, right? Sunway Pyramid, where got empty shop lots,
Yep.
you know, maybe occupancy rate like what 95%. It's pretty solid, right?
Yeah.
Every single mall you go to is almost full. Got
Yeah.
rental, got, you know, customers always go in. Malaysians like to spend money.
Yeah.
Solid ma, buy only lo. Went all in lo. But who knew pandemic would come?
Yeah.
You know, so that was the very initial stage of my investment journey, and then that sort of opened up my mind that, oh, maybe I should look up beyond the safe havens, beyond Malaysia. So I forayed into US market, therein the content lah,
I see.
everything.
I see. So obviously, I'm assuming your US investment portfolio makes much better returns than your Malaysian portfolio.
Absolutely.
Ah.
So I have to put that right. So just to let people know, because if you want to really compare head on Malaysia to US, right? We are what 1.9 trillion GDP,
Yep.
whereas the US is easily 200-300 times larger than Malaysia.
Yep.
That in itself, like, you're comparing an ant to an elephant.
Yeah.
The liquidity, the number of innovation, the way the market is structured over there. US is a free market. Innovation runs free. Innovation equals to growth, equals to share price gain,
Yeah.
equals to, you know, money. And then US dollar is the world's reserve currency.
Do you think that's gonna last forever and until the foreseeable future?
I love that question.
Yeah, because there have been a lot of questions about, you know, BRICS, China coming in and wanting to make the UN the next global currency. And because of all this tension, right, it made me understand more about how and why each country would love to have their currency be the global trade currency. Because look at US has just been thriving. I mean, they are trillions in debt. They are trillions in debt, but still people still holds USD as a safe haven.
Yeah.
Yeah.
Because like you just think about it, like every country you go to, like you bring USD, right?
Yeah.
The money changer locally will take your USD.
Every developing country,
Yeah.
it's either you pay my local currency or USD.
I feel like any country in the world, they just take USD. Let's say you go to Mozambique or whatever.
Yep.
You bring USD there, they'll change for you to the
Exactly.
local currency. You bring ringgit there, they're like, what is this?
You know,
toilet paper money?
petrol is traded in US dollar.
Yep.
Your gold, your commodities are traded in US dollar.
Yep.
Everything is under US dollar for a good reason, right? So all this falls back to, well, I like to pull out this particular chart by IMF all the time, right? It's basically what kind of reserves are countries holding? Long story short, foreign reserves in the world, right? Let's say countries have extra money. Where do they keep? They can keep their own fixed deposits, right?
Yeah.
So where do they park their money into? 60% of the foreign currency composition in the world right now is in US dollar. Okay? Where's the other 40%, right? That's your next question, right?
Yeah.
Probably, right?
Yep.
The second highest is in the...
British pounds?
Is in...
No.
No, Euro.
Euro. Okay.
Euro. And you want to guess what's percentage?
30%?
No.
10%.
16%.
16%.
16.
That's second place.
Wow.
Then third is it?
So just now you mentioned about the dollarization.
Yeah.
Basically, people moving out of US and then maybe Chinese yuan.
Yeah.
Want to guess Chinese yuan's foreign currency composition stands how many percent?
Oh,
Take a wild guess.
1%.
I don't know, man.
10%.
10%. So actually, Ryan, you're
Wait,
very close.
10%.
No, you're very
It's
close.
about 2%. It's about 2%.
Wow.
Way.
Why? Long story short, countries or governments prefer to park their money in safe havens.
More matured.
More matured,
Yeah.
less political interference, inconsistencies, volatilities.
But America's political
What happens,
political landscape is completely
For the last 3 to 5 years, maybe.
Yep.
So that is correct. For the last few years, it has been very hectic and messy, right?
Yeah.
Which precisely describes why their foreign currency composition has dropped from 60, 56, 55% like that. It does drop. Over the last 20 years, it was actually about 79% in 2001.
Yep.
Yeah.
In terms of foreign currency composition.
Oh, wow.
Back then, no one can even touch the US at all.
Yeah.
Now it has slowly withered down. But that's 20 plus years later, 20%.
Right.
What
So how
happens,
long are we
right?
talking about? You know.
Let's say, okay, we all know why China can make this claim that I want to be the world's leading currency, because we also are aware that China manufactures a large number of everything in
They
the
are the
world.
biggest manufacturers of the world.
Exactly.
Correct.
Yeah,
So
I-
what if suddenly one day China just tell all its factory or pass a law, you will only accept Chinese yuan. You are not to accept USD as payment.
Oh.
Meaning whatever people do, yes, they need to change the USD to Chinese yuan. Your prices are all in yuan. Would this affect? Like, is this how China can put their yuan on a pedestal and be like, you have to buy my yuan now. I'm forcing you to buy my yuan now because you need to buy my product. And because I know everyone needs to buy my product, I have this power to power up my yuan.
I think we World War III, bro.
So,
Happening already, I think.
to answer that question, right? Technically, that's one option, but to do that, right, at what cost? They are, alongside Japan, one of the largest US foreign currency reserve holder.
Oh, really?
So
Oh,
in
yes.
a way, they rely on each other.
Yeah.
What if they just dump all their foreign currency?
It's also dumping themselves.
Oh, true.
In that sense. Yeah, you want to shoot someone, basically you have to shoot yourself also.
So,
Because
okay.
you're holding an interest, over there.
So you said that US obviously is the largest foreign. Okay, so foreign in terms of ranking, US number 1, number 2 euro, number 3. Can I say Swiss?
If I remember correctly, it's a pound.
Oh, pound. Oh,
Yeah.
Okay.
So all those are 12% below already.
So back to my question. Do you see people shifting away from the US dollar anytime soon?
Well, if I want to go against the current, I don't think so anytime soon.
Oh, okay.
But things are happening.
Yeah,
BRICS,
yeah.
the
Yeah.
BRICS nation, people are going against US dollar for good reasons, right?
Yep.
Donald Trump, long story short, is a bully to the
Yeah.
world.
Yep.
Yeah.
Because of his military strength,
Yeah.
because of the tech that he holds, because of the liquidity of the world that he holds in the country. So for good reasons, he has that extra firepower. He can do that. But we all know he's a bully, right?
Yeah.
Just put it plain across, right? So do I see that happening anytime soon? Not really. Because like I said just now, to wither down the foreign currency reserve, it takes 20 years to reduce 20%.
Right.
And it's still at 55-60% today. So how long will it take? It might get progressively faster, but how fast? At least 20,
and
30 years.
your whole world has to kind of be on the same page of whittling down this
In a
thing.
way.
Yeah.
Correct.
Yeah.
I went to
because
a-
if it goes down, it can go up also. It's not just always going down forever.
Correct.
I went to a talk one day, a banking talk, and they said that US and China, they can't omit each other. They need each other.
a very
Mainly
toxic relationship.
Yeah, it's a very toxic relationship, lah.
Toxic. man.
Yeah, it's like
Two toxic ex go.
because US requires a lot of raw earth materials from
The rare earth
China,
materials,
rare earth
correct,
materials.
yeah.
And China is they hold almost above 70% of the rare earth materials in the world. What do they use these materials for? Weapons, aerospace, and all. So tech, yes. A lot of things.
Everything.
Yep.
So hence why, right, the manufacturing industry in China is crazy. They are literally putting out EV cars like nobody's business.
Yeah, like just talking about cars, right? If I asked you 20 years ago, buy a Chinese car, you'll be like, you crazy.
Yeah.
You want me to die? But now everyone is driving a Chinese car.
I'm actually considering in buying a Chinese car.
Which one?
Technically, I'm
Zeekr,
driving
Zeekr.
Zeekr looks
Oh.
good.
BV.
Yeah,
Yeah.
it's super nice.
Hey, my
Zeekr
dad is
looks
getting one.
good.
Oh, really? Which one?
Yeah.
The 7. Oh
And
yeah.
people don't realize if you're driving a Proton, you're more or less driving a Chinese car. You know, the Proton,
It is actually.
X70, the X50, the S70, they're all literally Chinese
Under
cars.
Geely,
Under
right?
Geely, they are
Geely.
rebatched Geely cars.
Right, right,
Yeah,
right, right.
of course they got some input with local engineers lah, but they're pretty much Chinese at the core.
Okay. All
So,
right.
like, the manufacturing in China is
The producer is
on
like telling us,
another level.
"Oh, we're talking very long. Okay, no, more into things." So, a new investor who wants to get into investing, all right, where should they look? Where should they start? Should they start local? Should they start US straight? Based on your, because you said you started 2019, now it's 2025. You've been in it for about 6 years.
Last year, more or less, yeah.
So, what would you, if you were to go back to your 2019 self, what would you say?
Wow. So can I take one step back for that question, right? Because to answer that question, right, if I say US, right, personal preference is US for sure.
All right.
But then Bursa won't be happy.
Oh yeah.
But if I say Bursa Malaysia or local stocks, there are hits and misses as well. It's not to say the market is bad. It's just that there are more better choices, easier choices over the foreign market. So just take one step back, right? The way I look at it, right, is like you need to understand why you want to invest in the first place.
Right.
Right. And that will lead you to the answer of which one you need to go for.
Okay.
Some people are just happy with 5% dividend. They are happy with that.
Safer.
Power to them, right? No problem.
Yeah.
I mean, not safe like dividend, 5-6% REITs or banks. It's solid. It's solid for them, right? They don't need that astronomical kind of growth, right?
They're not looking for the miracle hit.
Correct. And I mean, in US also don't have to hit miracle.
Yeah.
But, then beyond that, they don't really care about currency depreciation, ringgit depreciation, policy uncertainty. By all means, power to you. Local stocks work just okay.
Okay.
Blue chips are
Yeah.
the bigger solid companies. But then, if your life goal ties back to investment goal, you want luxury things, you want better, you want travel, you want more money, you want more generational wealth, right? Then you should seek beyond 6-7%,
Yeah.
right? And then historically in the US market, they have this thing called S&P 500 index,
Yeah.
Yeah.
which is basically an index that tracks 500 of the largest companies in the US, right?
Yep.
Historically, 11% per annum for the last 6 decades.
Okay, 11% meaning dividends or the return.
Annualized return.
How like
Up,
as
down,
the,
up, down,
the-
analyze.
so okay, when they say that, what do they mean? That means you buy at one point, you buy at one price,
Yep.
and then you have a chance of getting 11% return because the stock goes up. Is it?
Long story short, yes. But let's say if you put money in 1960,
Okay.
when it started around 1960s, right? By 2024, your annualized return is 11%.
Per
So
annum.
every year you are compounding about 11%.
per annum.
Per
That's
annum.
insane.
So certain years, obviously, there are Great Depression, the Asian financial crisis, there's dot-com bubble, COVID, up, down, sometimes plus 40% a year, sometimes plus 20%, minus 20% a year.
Yep.
Up, down, you normalize, annualize, it's about 11%.
Oh.
And that's freaking solid.
But does that mean that you need to consistently be dumping money in there to average out your investment, or can you just put in one lump sum and then leave it there forever?
Yes and no. To answer first part of the question, you can just one lump sum, and that is the annualized return you have. Because first part of question, second part of question, the moment you dump extra money on top of it, right? Technically, you're also buying up, down. So your return will change. So if you luckily bought at the lower ends during crashes, you buy more, obviously your return is more than 11% in that sense, right?
More than 11% meaning.
Basically,
you buy
the
So
layman,
does-
the layman term is 11. If you put money, you put $100 now,
Yep.
and
You might get 11 ringgit at the end of the
and
year.
you just don't touch lah.
Yeah.
The trend is every year you get 11% back. So you're gonna get $11 every year.
How high can the S&P
But not
500?
every year. Some years are crashes.
Yeah,
on average. On average. Yeah.
After 20 years, you take your returns and you divide by 20, it should average out to be about 11.
And then
ringgit.
there's a caveat to that.
Yeah.
There's a huge caveat to that, right?
Uh-huh.
At years like pandemic, where the market crashes 30-40%, people just withdraw.
Oh.
So not everyone, theoretically, you can stay invested, but not everyone stays invested during the bad years. Why? Because you might lose your job.
Yep.
Why? Your funds just crash 40-50%. Your rental goes up. Your landlord also wants extra money. You got no extra money. You lost
you
your job.
have to
You
take
have to
out.
withdraw money, etc., etc.
Same-
Things like that get into your way. One.
The same concept like you say Chinese new people need to withdraw money for ang pao.
Exactly.
Same thing. You need, this is your
yeah.
people's rainy day fund lah.
Correct.
So on a rainy day, people will withdraw.
So
the
they say
money.
you shouldn't invest your rainy day fund precisely because of that.
Yeah.
Okay. So okay, S&P 500 tracks the most successful 500 companies in America? Do they pay out dividends?
Of course,
Some,
yeah.
So that means as long as you
So we're not even talking about dividends yet. This is just your
Ticker.
stock return.
the stock return.
The index, okay. The index tracking the ETFs, the exchange traded funds, basically the stocks tracking the index. There's a lot of different ETFs.
Yep.
But in general, their dividends are very low because they all park under the returns for the capital gains, basically
Yep.
the share price.
Yeah, yeah.
Right, yeah. So dividends are like 1.5%.
So that's just the extra little.
And with a
pocket
little
money lah.
caveat, right? When US companies or US assets, US domicile assets, right, pays out dividends to non-resident aliens, they call us. Malaysians are non-resident
yeah.
aliens, right? There's a 30% withholding tax.
Yeah.
So ultimately, the dividends are not attractive. 1 ringgit becomes 70 cents.
Okay.
The
Yeah.
dividends are, for example. So that's why it is so universally advised by people, to just go for capital gains for Malaysians, right? To go for capital gains in the US,
Right.
not for dividend plays.
And they also structure it in a way where what they try to put more importance into the capital gains rather than the dividend payout lah.
Yes and no, because they still have their own market to serve, so they don't just serve non-resident aliens, right? So we can cherry pick which one suits us best in terms
Yeah.
of tax policies and whatever return we're looking for, lah. And there's another one big one on top of the withholding tax, right? 1 ringgit becomes 70 cents, right? 30% withholding tax, right? Another one we call the US estate tax. Don't know if you all heard about it before. Right?
No.
Basically, when you pass away, you get tax on your US assets
Yeah.
Yo.
above a
the-
certain threshold.
Yeah. It's quite.
Okay.
Shufei is
high.
like, what the? Why would it?
Yeah.
Very steep. It starts at, if I'm not mistaken, $60,000 US. Then you have certain brackets, slowly go up to a max of 40%.
Walao eh.
Very huge. Correct.
Why are they still in debt? Why is the US still in debt? Okay, so S&P 500, obviously, I mean, talking so much about that, is one of the places you would encourage to invest.
I cannot advise.
You cannot advise
I
that.
cannot
But
advise.
yeah,
lah.
because there's much higher risk.
You can just say, take a look at it and see if you like.
Generally, if you read online, that is the universally accepted and approved. Because why? Okay, everywhere in the world, right, people use a benchmark of whether you perform well on the portfolio or not.
Yeah.
What's your benchmark, right? S&P 500 is the benchmark.
I see.
If you cannot beat that 11 to 12% per annum return, right, why waste your time?
You're better off going
Understand.
for.
In a way.
Yeah.
In a way. So is that the best? It's subjective to people, but generally that is the most acceptable and popular.
11% per annum. And that's pretty good.
But you also gotta remember, it's like, when you buy into the S&P 500, can you just buy straight up the S&P 500? Means like it's a portfolio that auto splits into all into this index itself.
Yeah.
Or do you have to go in and choose the company?
No, I
No,
think
it's
you
one.
no.
You
I
can
don't
just
think.
buy as one, right?
Yeah, and then they will distribute the funds for you.
Correct?
Yeah.
So you buy into the entire index lah.
Okay, I'm
Then you have to-
an S&P 500
After,
tomorrow.
like, I got 1,000 ringgit. I want to buy S&P 500. Oh, I can only put 2 ringgit each company.
In a way, they segregate it like that for you,
Yeah.
but you don't have to
Yeah,
do the
yeah,
work.
yeah.
lah.
So
You don't have
then-
to do one by one lah.
So do you then after you invest in the S&P 500, do you then go dive into the S&P 500 and look at the 500 companies and see the top performing one and then buy more shares of the top performing one?
So again, two part of the question, right? First part, no. Why? Because the beauty of the index itself, right? Index is basically the thing that they constructed by people.
Yeah.
So that people, they actually manage it, but passively, like they don't really treat it every day. So they manage the weightage only. So I don't know whether you all heard about this, like companies that are successful, they actually enter the S&P 500.
Yes.
Companies that are lousy,
They get
not performing,
out.
they get kicked out of the S&P 500.
Yeah.
It's like a club,
In a way,
It's like a club,
Yeah.
It filters itself.
Okay.
The bad ones, they get eliminated over time. So technically, they recruit the good ones. Like Tesla was entered S&P 500 in 2021, 2022.
Uh-huh.
So good companies get recruited into it.
I see.
Yeah. So anyway, they reward the goods. They eliminate the bads.
So is there
It's like a
ever
rolling ranking of your top 500
Correct.
companies, ma.
Correct, in a way.
Yeah. So the 49, 499, 500, when they drop down to 501, the one
Yeah.
to 501 go up, then
Correct.
you change lor.
okay?
But to
so-
be fair, right, just one point to chip, right? There's this stats that says 70 to 80% of the whole S&P 500's return is contributed by the top 10 stocks in the index.
so should we just buy the top 10 stocks then?
If you can afford it.
I mean, top 10 are what we are talking about, like what Meta, Apple, Nvidia, Google, Microsoft, right?
Okay, I buy that.
Historically, they did well.
So can I say that the good place to start is an S&P, just to look at the S&P 500 first? There's a few, right? 500 is a VU lah, this lah, that lah.
VOO, SPY, SPLG, etc.
Then I'm pretty sure a lot of people ask this question. I look at the price now, so high. Is it too late to invest?
It's never too late. Yeah, she got it. They say the best time to invest was yesterday. The second best time is today.
Okay, I do it after this. Wait, so do you
Best time.
do you do it through an app?
Correct.
Or you don't do an app lah?
Yeah.
Can you trust apps?
Depends on who runs the app, whether they are licensed or regulated.
What app are you using? Right? What do you use one or more than one?
I use more than one.
Oh, really?
Yes,
Okay,
correct.
are you able to share
Shout out
what
to
you're
my
using?
sponsors.
What are you able to share what apps you're using?
Yeah, sure. I use a combination of Momo Malaysia
I use
license
Momo also.
and Webull, and also Interactive Brokers. Actually, I started with Interactive Brokers,
Right.
but they are not licensed in Malaysia, so that's why I put now more effort into Momo lah.
Okay.
etc.
Oh, so Momo is actually a pretty good place to. I started investing in Momo.
Same.
I don't know what I'm using. I'm not. To be honest, right, I go into Momo lah. It looks very freaking confusing lah.
Momo,
Oh,
is it
for sure.
Okay, what?
local market or
International.
international market?
International.
So if local market, can you also use Momo? Or
Can you can
Yeah.
trade Bursa Malaysia with Momo?
Yeah, you can. But if you trade international, right, I think there's a limit one per year of foreign currency. Each individual has a limit of I don't know how much.
There's a cap lah.
There's a
Quite
cap
huge.
ah.
I think 1 or 2 million, something like that.
Oh wow. Okay. Okay. Never mind.
irrelevant
We
for
won't
me.
even reach, yeah, we won't even reach there, bro.
A bit irrelevant right now.
No, right now,
But you
I'm
have to. You also have to subtract the foreign currency assets you own. So let's say the limit is 1 million, right? Let's say you own a property 600k, right?
Yep.
So maybe you can only invest 400k like that.
Oh.
So that they want you to declare upfront there's certain limit one. So in a way, you see it's like safeguarding ringgit outflow lah.
Understand.
Because when you buy
Still
US,
irrelevant
you buy
for me.
USD, yeah.
So
Okay.
yeah, well, I'm invested in Momo now, but I bought a stock. I bought a bank stock, but I didn't realize. I realized that, but you can leverage trade. That means like if you put 1,000 ringgit in there, you can kind of sort of take a loan from the exchange and buy more stocks. But obviously, there's a risk to that lah. Leverage trading is like taking a loan to reinvest into an asset. So obviously, yeah, do your research on that. That's quite interesting. I learned about that because I read this article where they say billionaires or millionaires do not invest their own money. They always invest other people's money. Yeah, where they will take for example, they'll take their 500,000, they'll put it in something that's very, very like stable, like gold, silver, or a blue chip stock that's very stable. They put it there and then they lump it up as a portfolio. Then after they go to the bank and say, hey, look, here's my $500,000 portfolio. Can I take a loan of $100,000? Then they take the $100,000, reinvest it back. Yeah, and then they compound it, and that's how the rich get richer. That's what I read lah. Okay.
Long story short, it's basically how they try to avoid personal income tax and corporate income tax lah.
Oh.
So they structure it as like buying assets and portfolio, then take a loan with the asset as a collateral.
Yeah.
Right. So basically you use loan to make more money lah.
Right.
And they already have a sort of a working business model, stable cash flow already. So with that, they use money to make more money. So it's not wrong, but it's different player.
Yeah. So okay. You use apps. Is it better to use apps or is it better to go through a bank?
What difference does it make?
I don't know. Maybe the app one day the fellow say, hey, wow, so many people deposit money in me. Okay lah, I zao lo.
Okay, to be fair, I was just pulling your leg. To be fair, right? Even if you go into the bank, right, they also ask you to use app. But
Yeah, lor.
yeah,
Yeah, but it's
there's
bank,
there's a physical reminder.
There's a
over there.
physical,
Correct, correct.
physical building that you can go and throw your shoe at, if something goes wrong.
Correct.
But an app is an app,
Correct. So there is a difference between whether you trust a bank more or do you trust a digital bank more. Technically, both are Bank Negara licensed and regulated.
Okay.
Or let's say a Touch and Go e-wallet. Do you trust your Touch and Go e-wallet more or your CIMB physical bank more? Obviously, for most people, CIMB maybe
yeah.
more, right? Yeah. But is Touch and Go bad? They're also like, in a way,
They've been around for a long time.
They've
Yeah.
been around for a long time, licensed, and then also owned by CIMB.
Oh.
Right. So
Yeah.
in a way, CIMB and N Financials lah. But in a way, also licensed, regulated, backed by secure companies behind lah. So obviously, not all apps are safe.
Yep.
Right.
Yeah.
First layer I always tell people is check with Securities Commission. If they are not licensed, then you have to see where else are they licensed already.
Okay.
So that's the first layer.
They may be licensed in another country, just not
Correct.
in
They might
Malaysia
not be
lah.
interested to operate in Malaysia because
Yeah.
of a small market, right?
And
For
when-
example, like Interactive Brokers or Tag Brokers, they are licensed in Singapore, one of the largest and most stable, not largest, but one of the most stable country in the world in terms of monetary policy wise. But they are not here in Malaysia. So
Yeah.
does that mean they are bad? Not really. They're in US and Singapore, right? Yeah.
But the problem when they're not being licensed in Malaysia is that, let's say if something were to happen
Then you can't.
locally,
Yeah.
like Malaysia government will not be stepping in to
Correct.
because I'm assuming to be licensed you have to submit certain documents for audit.
Lots
There's a
of-
lot of procedures and checks that makes Malaysia say like, okay, you can do this here lah.
Correct. So obviously the fallback is where am I covered law? If it's not Malaysia, then like for example, am I covered under the US one or the UK ones for the non US citizens one?
Yeah. So they might not be. It's not like those apps are like dodgy. It's just your insurance is not covered under
Correct.
Malaysia region lah.
Actually, I would say like securities in general, right? Although there are also still many scam apps, right? Securities or stocks in general, right? They are relatively safer because stock exchange is still centralized exchange, still monitored and governed and controlled by the governments, right? Crypto is the Wild West. Even though they may be licensed in UK, big countries, right? Things can happen very badly there. So yeah.
Okay, I know my producer is like, hey, you know, you're overrunning things. But no, I need to ask these couple of questions because I feel it'll be very beneficial for a lot of people. Okay, what's the best personal finance practices if your salary is about 3,000 ringgit minimum per month? If you want to start investing, grow your portfolio, etc., should you be investing the entire 3,000? Some people think like I know, but some people think like, I invest 50 ringgit only. What's the point? So little, so small. Yeah.
No, you're right. At 3,000 ringgit, I would say investing in yourself, as cliche as it might sound, right, is more. It yields more return compared to whatever asset you can bring. You know, if you are Warren Buffett, you bring like 20-25% return on the money that you invest in. But at 3,000 ringgit, what 30% if you beat Warren Buffett is like what? How much? 600 ringgit. You know, it's not much money, right? So at that point, I think because 3,000 probably is just fresh grad youngsters, right? Your knowledge, your skill, your network, go to the gym, you know, all this kind of stuff, right? It brings so much more return. The fact that you go to the gym, you have a good, you know, appearance, people look up to you. You get better job, better pay, you convince people for sales, right? The fact that you can speak well, communicate well, you gain more sales. Your one sale close already eclipse every single investment you can do at under 10,000 ringgit.
Or maybe another way to look at it is like, even if you do invest in other things, you're not thinking of the returns in terms of monetary. You can think of it of education.
Correct.
Let's say even if it's $100, the return is only 6%. I only make 6 ringgit, but I'm learning about the market. I'm learning about the app. I'm learning about that. I think there's a lot of way to calculate returns that's not always financially. I mean, the goal, yes, you want it to be financial. I want to make my 100,000 so that I can, you know, I can get more investments out.
Yeah, but at the start, focus on yourself first.
Yeah.
But the goal of investing, right, especially for everyone, I think under 30s, right, it shouldn't be all about plus 20%, plus 5%, plus 10%, right? I mean, that's cool. Green color, who doesn't like it? Right? Profits, right? But ultimately, right, it's more, if you don't forget about it, it's more about freedom of choice. I think maybe Jeanne, you can relate when you run a company, when you have a huge cash buffer, your freedom of choice is different. The decisions you make, right, more YOLO, more aggressive one.
Not really. My staff like to spend my money a lot. Look at him right
I
now.
don't give him that freedom.
Yeah, he'd be like, you're doing well, right? Okay, we need to buy this.
Buy the new cinema camera.
Yes. Once I grow the Crest Reserve, there are more risky things that I would really go. Okay, I'll give you an example. Like, if we were a very small startup, we would try this podcast right now. We'll probably do it in our living room, my own house, our own office. We'll make shift one area. But for us, is when we have a bit of cash flow. So, okay, let's just make it look good. Rent a studio. It's like no problem. We can afford it.
Yep.
Yeah, because we understand the value it brings when we do that.
Yeah.
So I think your mindset changes when your portfolio changes. I feel and it not necessarily is always monetary. Yeah, it allows you to make a lot of better decisions when you are more secured. I feel
Because it gives you room to evaluate longer.
Yes.
Right?
Yes.
Then you can see, you can evaluate better.
The long-term
That's the
game.
beauty of it.
You're willing to take a loss at some point too.
Correct.
And with that knowledge, you know once you lose it, you know it's a very, you're aware of that loss, but you know how to make it back, that kind of thing. It helps.
Can I just add one more thing? Sorry, producer. Just a quick one.
Go for it.
Because I think anyone watches this, if they even watch until this point, right, if they are still not convinced about investing or building wealth for themselves, right, I always say this, right, this is Elon Musk's first principle. You want to build very complex rocket ships or anything complex, right, you break it down to the monomer. What's the very basics of what make things work, the physics, basically the things that makes up the whole equation, right? So let's say you want to make more money, right? You have to understand that money is just another form of currency of time.
Yes.
Money is just another form of time, right?
Yes.
So you want to make more money, you need to know that it's time.
Yep.
You only have finite 24 hours a day.
Yep.
So how to save time? You can't save your own time. You can only save so much. So you save people's time. How to save people's time? You solve people's problem.
Yep.
Right? How to solve more problems? To save more time, you scale up your problem, your solutions. That's how businesses are made.
Yep.
10 people's solutions for 10 people's problem, save 10 people's time, 100 people, etc., etc. But below 30, if you don't have the knowledge or the money to start a business or even can't even take the risk, invest in business that does it for you.
Yeah.
So that's basically the essence of why people own equities or assets in the first place. Let them work for you instead. They manage your money. So that's basically the brunt of it.
Yeah, time is very valuable. I've learned to realize that. I right now buy back time for myself. I really do.
Time is money.
Yeah, time is money.
Quite literally.
Because when I grew up, it literally, I had no time to do a lot of things. But now it's like I buy back the time to do the things that I want to do. Well, that's a conversation for another day. I need to ask this question. Okay, this one must ask. So recently, right, our Prime Minister, Anwar Ibrahim, gave a one-off 100 ringgit for all Malaysians above 18 years old through my card, starting 31st of August, right? What I know there are a lot of discussions out there. One being that this is going to boost the economy. Like 100 ringgit times 32 million people, not 32 million, they say 24 million Malaysians, right? It's almost 2.6 billion ringgit injected into the economy that helps grow the GDP.
100 ringgit times 22 million is 2.2 billion.
2.2 billion, sorry.
Yeah.
My math's quite bad. Yeah. What's your thoughts about that?
I mean, that's just one of the 5 things they give, right? Then still got holiday,
Yes.
toe hack freeze, right? 2.2 billion is, if you put it in terms of GDP, if you divide by Malaysian's GDP, 1.9 trillion, maybe 0.1%. It's actually very small. Very, very small. Does it boost the retail market for the next 4 months because of the 100 ringgit? Yes, because every household will now have extra 200 ringgit to buy stuff.
Yep.
And for M40s and B40s, in general, they will just spend all of it. So definitely that extra 2.2 billion ringgit is stimulus will be injected to the market and will stimulate the market for just a little bit. And it's still very small. Why? Because if you look at Prihatin COVID, it's meant for COVID pandemic to help businesses, SMEs, and also B40s. And look at back then, BR1M. There's so much more money. I don't know if you still remember or not. You get like 200, 300 ringgit every 3 months, 6 months like that. That's so much more money. So this one, in terms of nominal amount, it pales in comparison. But then the difference is actually, interestingly, I read, this is actually the first time in our history, our nation's history, that is given to everyone.
Every single one.
B40, M40, T20s.
Yeah.
So even the Dato will receive 100 ringgit in their card, which is kind of funny actually.
Yeah.
Right.
It's like
I saw
brim.
these people saying like, oh, T20, like, go and donate it to somewhere. Like, let's be real, you don't really need it. Which is true, but then...
And they're giving us a
they
time
are-
limit
they
to
have the
spend
right
it.
to
Wait, what can we
Formats.
use it on?
Your
essentials, I think.
essentials or your
So-
groceries.
It's like when you go to Lotus or Giant or 99 Speed Mart, or then you can use your My Card. Like, there's a list of approved one. I think it's to prevent people from taking this $100 and go to like some atas grocery and buy caviar. It's not for that. It's for your daily essentials, to buy rice, to buy cooking oil. In that sense lah. For your
But
household
long
products.
story short, it's very inefficient spending for subsidies purpose, right? Because if you look at it, definition of subsidy, it's to help the poor to close the inequality in terms of income, right? The gap, right? So this one was in a way poorly designed. Long story short lah.
Yeah.
Hopefully I don't get flagged.
Ziet, thank you so much for taking time
Thank
to
you.
come on the show.
Thank you guys.
I know you need a lot of time to look at all your big investments and double them up and triple them up. But for those who want to watch more of your videos, where can they go?
We have a YouTube channel, Ziet Invests. I cover everything from not just stocks. We used to do stocks. Nowadays we do a lot more news and economics update. I think rather than looking into individual stocks, we now encourage people to understand the news of the economy more. Therein you understand your money better and you'll make better financial decisions, and that is all we stand for.
That's right. Well done. Well, thank you very much. We hope you guys have learned something or two from today's episode. I hope you will retire one day a billionaire. If you do, make sure you give us a bit lah. You know, you heard some advice here lah. You know, give us some credit lah. But thank you so very much.
Hashtag not financial advice.
Hashtag not financial advice. But thank you very much for listening, guys. We'll see you guys next time.
Bye bye.
So what do you think about Pokemon cards?
Hey, enough lah!